Good evening, everyone, and welcome to tonight's BullCharts User Group webinar. We're getting underway. For this user group session, we've got a speaker tonight, a member speaker who will be presenting shortly, doing a demonstration of some software. Hop across to the agenda that I prepared for last Tuesday's Melbourne meeting. There it is there. And the intention in our meeting last week, and basically to repeat that for tonight in the webinar, was to have a demonstration of RealTest software, a software tool that Des has now got some experience with, having played with it for some time. So Des did that last week and he's happy to repeat that tonight. I'll record that in tonight's session so that we might post that for other users to view. That's the rest of the agenda for last week. The minutes from last week's meeting, these documents are both available for everyone. Tuesday, September 20, that's it. Some key points from Des's demonstration of RealTest software, that's in the minutes there, and some brief notes about our discussion to do with the BullCharts Security Manager aspects, including the information that's already available within Security Manager, the top portion of that screen there, the other lists entry, which is this one here, comprising global indices, SP500 commodities, crypto. There's a brief description there, and the databases entry, which is further down. So a brief discussion about those, and two knowledge base articles, I think one of which is new now and one which was updated. You can find those in the BullCharts knowledge base. You can either click on the link in this document or go to the knowledge base. To go to the knowledge base, I'll show you now in case we forget about it later. On the BullCharts website, bullcharts.com.au, near the bottom left corner, there's a link down here called knowledge base. Click on knowledge base. And in the next screen that comes up, there's the URL, kb.bullcharts.com.au. In here, you can type in something like what it says here, Security Manager, other lists. Just type in other lists, and it should go and find it. Security Manager, other lists, indices, commodities, crypto. So that's a BullCharts article that's a new one that I put up last week, 20th of September. And the other one here, additional databases, Index Com mfund, that's these things here. You can find that likewise up here, type in databases, and lo and behold, the knowledge base system that we're using will find that quickly. And you can have a look down there for some information about where these databases live, how the data is updated, how to delete an unwanted database if the data downloader is using too much resource when it updates the data. So that's referenced there. And further down in the minutes there, I've noted an update on YouTube video updates. Now, we still don't have a web address, youtube.com/bullcharts. We don't have that because we don't have 100 followers. Supporters, followers. We've got up to about 91. We're going to need a few more. Please have a look at those YouTube channels and have a look at YouTube channels and like and subscribe to those channels. Once we get to 100 very soon, we'll be allowed to have our own URL. Des, you're not a newcomer to this. You've been presenting a couple of times for us over the last year or two. So welcome back, Des. I guess you're all set up, ready to go. Des, welcome. I'll leave you to it. Thank you.
Thank you. Finally, we have the technology.
If NASA can send a satellite probe to crash into an asteroid, I don't know how long it took to get there.
Quite a while, yeah. Actually, it was only about a year, I think. It wasn't too long. Okay, guys. Thank you, Robert, for that intro. As we were saying earlier, I always find these sessions quite rewarding in that you guys at the webinars, I think, are technically more proficient than some others. But I find talking to a dumb screen with no feedback quite challenging. I normally don't mind standing up and talking, but this mode, this format, is more challenging than it should be, certainly. Anyway, as Robert has said, I want to talk about a software package called RealTest, which works out really well with BullCharts. I am not by any means an expert in RealTest, but I've been playing with it for the last few months. I'm getting to know my way around it to some degree, and I thought it'd be worthwhile letting everybody know about it, because some of you, at least, I'm sure, will find it quite useful. So the package is called RealTest, and it says here it's a backtesting package, so a backwards look to the future, what happened in the past, and what can we say about going into the future. So the agenda. First of all, just give an update on the SX game as is, because the last presentation we had 2 sessions ago, I presented a strategy, and I've now put that strategy into the SX game, the current SX game, and I thought I'd just give you an update as to how that was traveling. And that strategy I've actually back tested using RealTest within this software. RealTest, pure and simple, it's a back testing piece of software. So anybody who's familiar with Amy Broker will be familiar with how backtesting works in that. And superficially, at least, RealTest and Amy Broker look very much the same. I would contend, though, that RealTest is the better product. I've also played with TradeSim, which has an integration into BullCharts, and I would say that RealTest is better than TradeSim, although it has no particular interface into BullCharts, and I'd love that to happen. So I'll quickly go through a few of the features, but this sort of package, it's better to demonstrate it, and I'll be cutting back and forward between the RealTest screen and the presentation here. So I'll be using the presentation as sort of prompt. First thing I'll do is, how do you get data into the package, and that introduces some of the beginners learning how to things to do. Then I'll look at scanning, so that how do you get data out of the database? How can you look for things? How can you produce the weekly, monthly, whatever scan you want to do? And then the guts of it is, how do you develop strategies, back test those strategies, and play with that. So first I'll go through some of the features, examples as we go. Anything I've done here, as always, any bull script, any RealTest, freely available to anybody. Just get in touch with my email address is on the slides. Comments and questions, always welcome. And in this format, I particularly welcome them because it lets me know that there is somebody out there. Disclaimers, blah, blah, blah. So a quick update on the last presentation I gave, which is looking at the PMV strategy, standing for price, momentum, and volume. I've taken that strategy, put it into the SX game, which started on the 11th of August, and I've been playing it as best I can. One of the things I've mentioned in the past that I like about the SX game is that it's a real sort of world environment, and if you forget to log on one day and make your changes, it's gone. So that's like the real world. If you get to place a trade, it's gone. If you hit the buy instead of the sell, that happens, and you have to remedy that in real time. And in this game, in fact, I've done that. I've actually made a finger jumble during this game. But the net of it is, the strategy that I presented with PM and V, as of thus September the 16th, which is Saturday week or Friday week, it's in the top 2% of portfolios, both in Victoria and across Australia. So that strategy in a real world setting has proven to be effective. I looked at the results again today, and you'll be aware that the last 48 hours has been quite interesting in the share market, and it's still within the top 2.5%, 2.2%, I think it is, within the game. So that strategy is working quite well. Proof statement, that's the screenshot from this Saturday, the 17th of September. So it's a week ago, and you can see that my strategy, my portfolio, 26 in Victoria, 26 out of 1335, or 105 out of 5724. So that's where the 2% comes from. Anyway, RealTest. RealTest is a suite of software generated by a guy called Marsden Parker out of Canada. It's a backtesting piece of software, so that's pretty straightforward. It's got very comprehensive reporting details. It allows for, once you've set something up, the great thing about backtesting is you can say, well, what about this? What about that? If I did this, how would that happen? And the great thing about this is that the runtime is very, very efficient. It's a very, very fast environment. So the what if questions can be done literally in seconds. The good of that is you don't have to wait a long time to get a result back. The bad of it is you're running so many what ifs, it's very easy to get yourself totally confused. But it does give you the ability to run down rat holes very quickly and run down even more rat holes. Obviously, I said that has parameter optimization using a mechanism very similar, in fact, to Amy Broker. Syntax similar to Amy Broker and BullCharts. If you know one, you'll be able to get your mind around this one pretty easily. It's got nice screen editing facilities and features, which I'll demonstrate a little bit of. Technical indicators, you've got all that you need. Not as many, I guess, system indicators perhaps as BullCharts has got, but all of the basic ones are there, and you can build anything you want within RealTest. One of the nice features I'll hopefully demonstrate tonight is that you can run your strategy against a benchmark, and the normal benchmark you might want to use would be the XAO or the XJO or something like that, or the NASDAQ. But you can also run a combined set of strategies and then run those together as a suite of strategies and compare that against the benchmark. So there's quite a fair bit of sophisticated modeling you can do in this. The charting facilities within RealTest are mediocre. It's not designed as a charting package. BullCharts beats it hands down. My desire would be for BullCharts and RealTest to do some sort of integration, so you had the best of both. And I have put the guy who's designed RealTest in touch with Brendan, and they're having a conversation, but I don't know whether that will come to anything. I sort of alluded to the fact that it's a very fast execution engine. It's lightning fast, and you'll see how fast it is when I demonstrate. Two reasons. One is that it uses the multi-threading. So if you've got a multi-CPU desktop, as I have here, this has got 16 CPUs. My laptop has 4. When you fire something up, you can see all the CPUs running. So it's much more efficient, it's inherently more efficient. And also IMDb, it uses in-memory database. So when you load something, it chucks it all into memory and keeps it in memory, so you don't have all that I/O going to a database, even though we use within BullCharts SQLite, int light, or it's not as light as you might like it to be. And lastly, very importantly, if anybody who's worked within the Amy Broker environment would know that from an end user's point of view, it can be a bit of a rude, a difficult, a contentious, and angry environment. And the nice thing about RealTest in that regard, they're just nice, friendly, really nice people. Nothing is too much trouble. If you ask a question, they'll come back, and somebody will come back with an answer very, very quickly. The guy who runs it, Marsden, routinely, you say something, what about this? I found this bug, or wouldn't this be nice? And he'll come back within an hour or two and says, yep, that's a good idea. Bang, there's it's done. And he releases. Generally, he'll be releasing 1, maybe 2 or 3 releases a week. Okay, enough of that. That's the overview. Let's continue. I'll just go back one, if I may. I did say here it has comprehensive reporting, and I'll just show that very quickly for those of you who are familiar with Amy Broker. This is the RealTest desktop. I'll just very quickly fire something up. It doesn't look very pretty, does it? Just setting the number of weeks to run for the test. So it's just run a test. Don't worry about the test. We'll come back to what that means later on. But there was the test I've just run over 99 periods. I've asked for 100 periods up here, ran over 99. But the key thing is that one line there, that top line, is a successful back test. And if I run the report or ask to see the report, this is what it'll provide for you. So it has all the parameters. It has a summary of various bits and pieces. It has the summary over time of the wins and losses on a per month basis. There's the performance chart, the equity curve. There's then drawdown, and so all of this information is available. You've got your Monte Carlo. So there's the test we ran. It sits in the middle of the best and the worst. That in fact doesn't look too bad. Drawdowns, and then a copy of the code that was actually run for this, which is kind of useful. So you know that what the real code was that ran at this moment in time when you ran this test. So that's how it looks from a reporting point of view. First of all, data loading. How do we load data? Getting data into the system is very simple, and it's very quick. It comes 3 types of data. You can use Yahoo data, which is free, 20 minutes delayed. So you can run that multiple times during the day, and you've almost got real-time, near real-time data. Or you can run Norgate data, which of course is not real-time. It's daily data. You can bring your own and import it via CSV file. I haven't explored that, not something I've done. At the moment, because I'm still in this learning mode, I'm using just the Yahoo data. It doesn't look that bad. I'm aware of the issues with regards to survivability bias and so on. So I probably will move to Norgate at some stage soon, but it's not it's not life-threatening for me. You can load data pretty much anytime you like. You can actually do it as part of the strategy that you're running, or you can load it as a maintenance background mode, and I'll show you that, which is easier. You can define your own universe of stocks. So you could use something like Norgate, which would tell you what the XAO was over time. If you don't do that, then you have to define your own specific universe of stocks, and that's just a CSV file, just a list of stock, just a list of names, and that's all. So let's see how to load data. Example. It's my prompt to me to go here. So I'll go into a file directory I've set up, and I'll go to, where are we? Load data. And let's look at loading data, let's say the SX300. And this is the code that loads the data for the SX300. Very simple. It's got a chapter header, if you like, or a title header saying I'm importing. The data source is Yahoo. You then say, using include list, what you want to pull in. You can put an explicit list of stocks like this. These are indexes, and that's why I've pulled them out separately. Or you can point to a file, which is just a text file of the names of the stocks you want to pull in. You can exclude stuff if you know it's in there and you don't want it. So just as an example, I've excluded AAA.AX. Yahoo data identifies Australian data with a suffix of .AX. I'm also loading here a symbol for info file, and this is a file that contains ancillary data regarding the ASX, in fact 500 in this case, and it includes the full company name, the currency it's in, the exchange it's run on, stuff like that, general background information, and all that is used for commentary purposes within reporting. I say that I'm saving the data once it's loaded in ASX 300 for RTD results something database, and I want you to give me all the data you've got starting at the earliest. So I click the apply button, and that really is a syntax check. It says yes, we're okay with that, and then I'll click the import button, and you can see down the bottom things are fired off. At the left hand side it says I'm importing 311 symbols from Yahoo using 16 threads. So all threads within this desktop are being used. And on the right-hand side, you can see some runtime information as the stuff that's being loaded up. And we're almost there. So in 26 seconds, this is loaded down all of the ASX from the earliest date. How much is that? Well, let's find out. First of all, let's have a look at some of that data. So if I say show the chart, we know that we're looking at ASX 300, that's the data file. And if I click on that, I get a very simple chart. So the data's in there. As I said, I'm not really going to look at the charting facilities because it's pretty crude, but it shows that the data is there. And that's all there is to it. That's how you load data into RealTest. Now, you would say, but what about tomorrow? Tomorrow, you would do the same thing, and it would load all the data again back from scratch and overwrite it. Isn't that inefficient? Yeah. But when it's taking you 20 or 30 seconds to load up all of the data going back to, we'll have a look at just how far it goes back, there's not really an issue. So let's look at something else. Let's look at that data in more detail. So what data do we have in here? Here's a very simple way to dump data. It's a scan. We're scanning for data. And here I'm saying I just want to print out the open, high, low, close of the data that's here. Apply that, because I always do that. And then click the scan. And there we see data has loaded up. And there's a lot of data. And you'll see that that data, I'm trying to get the start of it. That's got 2 years of data and came almost instantly. And it doesn't matter whether it's if you load weekly or monthly, it always loads the daily data and then aggregates into monthly and weekly for you. So if you want to look at data, it's very, very quick. If I only want to look at today's data, it's very easy to comment and uncomment things. So you can look at things, include and exclude. If I say bars left equals 0 and do a scan on that, you'll see that all I get here is the data for today, or for the week. This is a weekly data, weekly bars. And you can see here it's pulled in from that symbol information file, the real name of the company. So that's how you can put in extra information. Now, I'm not saying dumping data like that is particularly useful to you, but it shows you how quickly you can get at data. And that's pretty useful when you start doing more complex scans, because you can scan for data very, very quickly. Let's have a look at another scan, maybe. Don't want that one. So here's using the same data, but doing arithmetic calculations on that data, looking for percentage close changes over a period of time. So you can do more complex calculations like that. Again, in this case, this has gone over the 2-year period that we scanned on. Okay. So that's how we load data. It's quick, it's fast, and getting data out is equally quick. As I demonstrated there, you can scan for any combination of technical criteria. So if you can describe in an arithmetic formula what it is you want, you can get it out. And just the same way when you do a scan within BullCharts, you can code it up and then ask for it to come across. You can just select what you want by the dates. I'll show that. you see up here, you have the ability to say the date range you want to scan over. You can go from all data from the earliest, or you can say I want to go from to the latest, but I only want to do a certain number of bars. So 500 bars is roughly 10 years, would take you back to the 5th of January 1990. And I showed we could use that to dump examine data. I'll show you how you can use it to effectively explore a strategy that you've put together. And I'll use the PMV strategy that I introduced a couple of sessions ago. So I have in here, so this is a piece of code. I'll come back and dissect this a bit later on. This is a piece of code that implements the price, momentum, volume strategy that I put together a little while ago. I'm going to look at weekly bars because it's a weekly strategy. I'm going to look at it over 500 bars, 10 years, suits me. Again, apply it. When I say apply here, you may have noticed that there's a bit of activity down here. When you apply a new strategy against a data file, RealTest runs through the code, and the code is this data segment. It runs through the code and loads up into memory all of the intermediate values for all the different bars. So it does a whole heap of calculation and then saves those in internal memory so that when it comes to run and do the back test, it's got all of that stuff pre-done, pre-coded, pre-calculated, and it makes the runtime so much more efficient. If I now say I want to scan on this, in the scan section, I have said, I want you to run this strategy up above, and I want you to tell me what the current buys would be using this strategy. And at the moment, 27th of the 9th, this week, it's saying the top 6 stocks would be Pilbara, NEU, NHC, PRN. Those are the top 6 according to that strategy. And also, I choose to put out some other information. So smooth rate of change weighted. That's the that tells you how strong in my ranking this stock is. And then there's the price is up, it's rising. The SMACD, the momentum, that's the AM PMV is up, and the volume rising is up. So you can look at intermediate values within the code. The summary there is PMV X all of those are positive. So I've changed those 111s into a yes, just to make it easier to read. The close value. You may remember what I discussed about using a modified multiple moving average to identify whether something was green, red, pink, or orange. And I put the color in there. So I know that these 4 are green, so they are stronger than these 2 down here. And I also run this filter across the ASX XJO in this instance, and the XJO is saying they're red, you shouldn't be in the market at all. So you can make a business decision here as whether you think these recommendations are legit or not. I myself at the moment am sitting on the sidelines because I believe that the ASX and all the other market indicators are well and truly in the red, and now is the time to be sitting on your hands. So that's how you would run the scan to get the stocks that you want to buy. I have filtered this scan to be just the one date. If you took that part off the filter, this would give you all of the dates going back to the beginning of the data set. If you want to look back through history, and looking back through history, oh, wrong one. Not looking back through history on that one. Okay, so that's how you would use this to scan. Okay, let's look at the guts of it now, which is how do you write a strategy and backtest that strategy? And we'll start at doing it something very, very simple. Let's just write a strategy, a buy and hold strategy for the XJO. So this is a fully fledged strategy that will backtest according to the XIO. Very simple. Under test settings, I'm just saying I want to use $100,000. I give it a name. There's nothing life searching about that. I said the allocation, I'm just using the starting equity for that. That's just something you needed to say how much of the account size you're starting off with. The entry setup is if I have a symbol that's called up arrow AXJO, I want to enter every time I see that symbol. That says you're always going to enter when you see the XJO. And the exit is when bars left equals 0. That says when you've got to the end of the data set. I apply that and I test it, and that is weekly. For 1900, go back to 500. Make it a bit easier. That is the XJO over that time period. And that is how you would set a strategy, and that's the simplest strategy you can put together. Now let's make it more complex. Let's see how XJO and BHP work together. So there's the XJO strategy that I've just had, and I call it a benchmark because it's the reference frame against which all other strategies will be measured. And now I define a strategy called BHP only, and it's pretty much the same as the XJO strategy, except I've said I've compounded as false. I'm not using compounding in this example. Come back. Why is it keep apply that. And here you have the green line is BHP back to 1990. And the brown red line is the benchmark, is the XJO over that period of time. And you can see, not surprisingly, that BHP has outperformed the XJO for that period quite handsomely. But the key thing here is that you have the ability to compare your strategy with another strategy, and in this case, it's a benchmark strategy. All right, so let's just go to the next one. Same thing, only I'm looking at Combank, BHP compared against the XJO. And here you can see the green line is Combank, the red line is BHP, the yellow line is XJO, and then the shaded line is the combined. You can do this separately. So you can just, that's Combank only, BHP only, XJO only, put them all together, and then compare. That is something I haven't experimented with too much, but if you subscribe to the view that multiple strategies combined can give you a smoother equity curve, this is a very simple and effective way to test those strategies when they're combined. Okay, so what we're showing there is how to do simple backtesting using the XJO benchmark and then comparing that to a couple of stocks. That's not normally what we mean when we talk about benchmarking. Benchmarking is more, backtesting is more about defining a strategy, implementing that back over time, and then seeing how we can improve that strategy. So the best way to do that is to build in real time here a trading strategy. And the one I've chosen here is the simple golden cross strategy, the crossover on the 9 over the 21, and in this instance the simple moving average. Then we'll look at optimizing the parameters, and we'll then look at some of what the trades are within that backtest and see whether they make sense. Okay, so one I cooked earlier is Golden Cross version 1. So this is a strategy. You'll see at the bottom, it's benchmarked against the XJO. The things that are different in this one is we're starting to define a few bits of code. So there's a parameter section. Not surprising, this is where you put your parameters in there. I've got 9 and 21 as the fast and slow moving averages. Positions is the number of stocks we're going to hold within the portfolio, and weeks to hold, in this case 4, tells me that I'm only going to hold any stock for a cycle of 4 weeks, 4 bars, 4 periods, and then I'm going to sell it out and look for a new one. So that's essentially is a monthly sort of strategy, and that's the starting point. I then define the fast and the slow moving average. Again, the syntax within RealCharts is a bit terse. Under BullCharts, you would have a colon equals. Here, they just use the colon. Other languages just use equals. Everybody wants to be different, but this is the way RealTest does it. I have asked them to change that to a colon equals, but I was told bugger off. There you go. And we see there are no semicolons at the end of lines. I've asked for that as well, but I didn't get that either. No matter, we define the slow and the fast moving average. Then we define when they cross over. So we have a cross up. We define that to be when the fast moving average crosses up over the slow moving average, and then the other side, a cross down, is when the slow moving average crosses up over the fast moving average. So those are the data items I'm using for my strategy. Within the strategy itself, called Simple Golden Cross, I define how many stocks, how many individual stocks I'm going to buy. So it's the allocation, which is a 1/5 of the account size divided by the number of positions, divided by the fill price. That's the buy price on the trade. So that says how many I'm going to buy. It's a long strategy. I'm only doing long here. The maximum number of positions is positions, which it takes from the parameter section up here. Then the entry setup, this is the entry rule. And this says enter, buy a stock, or make it available for buying when it crosses up. So when the fast moving average crosses up over the slow moving average, that's crossing up, I say I want to make that stock available for purchase. And the exit rule is I'm going to exit when the number of bars held is greater than the weeks to hold, so it's greater than 4, or whenever we get a cross down. And I put a little bit of commentary here so to describe which of the exits it has taken. And again, compare against the benchmark XJO. That's all there is. This strategy, because I haven't prioritized anything, this will take up stocks on a first come, first served basis. Very simple. I'm not saying this is the bee's knees. You should use this to run your super fund, not in the least, but it's just to demonstrate that this is how you can very simply set up a reasonably realistic strategy. Do the syntax check. And there we have that strategy. The green line is the equity curve for what we've just been looking at. And, you know, it's been ahead of the game for most of the last 20 years. Some interesting big spikes. Wonder what happened there. But if you look at the summary details over, I've run it here for the total period of the that we have. it's given a net profit of 633,000 on an initial investment of 100,000. Rate of return 19%. Maximum drawdown 63. That may seem high. The way they calculate drawdowns here is drawdown compared to the allocation per stock. So that would be drawdown against $20,000 because with 5 positions. So it's not as bad as that looks. And here you see the parameters that were in use for this run. If I change something here, so if I say I want to have 10 positions, apply, do the test, bang, it's done. The equity curve there is somewhat smoother, which you might expect if you've got 10 stocks. You can see that's actually a little bit better. The parameters, only the 10 has changed here. And of course, you can spend your life changing these parameters to your heart's content. How do we optimize those parameters? Let's have a look at that. Version 2. So again, the syntax here is very similar to Amy Broker. Within the parameters section, we say what the range is for each of the parameters and a step if you want to go from one to the next one through this range. And then a default value, the 92154, which was the default value on the previous test. So if I run that, I get the same values, I hope, from the previous test. But what I really want to do is to optimize and find better results. To do that, I click the Optimize button. And the Optimize button pulls up this panel. And inside the panel are all of the parameters that are in my Optimize section. And you can decide which of these you want to optimize at any moment in time. Bearing in mind, the more you optimize and the more granular you make the optimization, the longer it will take, and perhaps much longer, but we'll see how we go. So let's just optimize the fast and the slow moving averages. You'll see that says we're going to have 160 different tests to be run. And that, if you look at it, is 10 to 50 by 5 is 48. And 5 to 21, that's 15. So that's 15 times 8. We'll run that. And these are all of those 160 tests being run. And you'll see it runs in an acceptably fast or short period of time. So that's 160 runs, 160 tests. Here's the parameters, the fast and the slow moving average that have been varied. The number of positions and the weeks to hold have stayed the same. So these two numbers have been varied according to the formula we gave it, and it calculates the net profit. If I click on the net profit, sort by that, it says that this one here is the most effective of all of those tests. So if I chart the graph, you can see that at the end of the day, it's significantly higher than the benchmark. You look at it though and you go, that's interesting. Let's have a look at that. Why have we got this big jump here? If I right click on that test, one of the things that comes down is show the trade list. This will show all of the trades that were in that back test. So these are the trades. Here's the reason why the trade was exited. In this case, most of them have exited because they hit the 4-bar limit. Bearing in mind, some of them may come back in. There are some things in here you probably don't want to see. Your ordinaries is in here. Am I really wanting that to be part of my test? Maybe not. We'll look at that in a minute. So if I sort these are the individual trades for this back test. If I sort them according to percentage win or loss, the highest one had a percentage gain of 900%. And that was BrainChip. Price of 2 cents, price in, that was the buy price. Price out of 0.2, so a sell price of 20. So that's a 10 times increase, so that is a 900% gain. And it happened on March 2015. Let's just see if that's the case. March 2015, yep, there's the huge jump. And that was because of BrainTest. Now, would you be entering into a trade? I can actually look at that trade. There's the trade there. Buy there at 2 cents, sell at 20 cents. Buy at 2 cents, sell at 20 cents. I would suggest you probably, in the real world, wouldn't be having that as part of your trading universe. Now, this is one of the reasons why this is here is because I've just taken the ASX 300 as it stands today, and if you go back then to 2015, BrainChip was a penny dreadful. So maybe you don't want this as part of your test. Using Norgate data and saying you're staying only with the ASX 300, it will filter this out automatically. But maybe you don't want to have that as part of your test. What other things can we optimize for? Well, maybe you want to put in positions as well. So let's say we leave those where they are. Let's optimize positions and number of weeks. And there's only 100 of these, so they should go through pretty quickly. And then you could look through those. And there are some crazy ones here as well. There's what the best performer here was if you've got a 9 and 21 because we left that, but only one position. And it's not unusual to find that top scoring strategies will only have a small number of positions. Why? Because it's an all or nothing strategy. Once it finds a winner, bang, it really is a winner. I would put it to that having positions of only one, maximum number of one in your portfolio might be high risk, high gain. Could be high risk, high loss also. Number of weeks at 7. So this is where you can go mad. You can go nuts doing all of this testing. Let's look at some of the things we can do. In this variant, it's the same as the last one. I've added one more parameter, minimum stock price. And I'm saying I won't allow anything to be purchased if it's got less than 25 cents. They're trying to avoid the penny dreadfuls. And I put in here, we're okay to buy if the price is okay, the close is greater than minimum stock price, and we've got that cross up. And then the entry setup is okay to buy. So that's just a minor modification saying I want to buy only if the minimum, the stock price is 25 cents or more, and we get the crossover as before. You do that, you'll see that the big jump in March 15 doesn't occur. And you'll find then the rate of return has come down somewhat. Now, one of the things you might look at this and say, this has got 1,100 trades out of 1,600 periods. That's sort of, that's what's that, one every week and a half? That's probably okay. If you've got a weekly strategy and it's giving you 1.5 trades, 3 trades a month, you're probably okay with that. Sometimes you'll find situations where the top strategy or the top set of parameters will give you a crazy number of trades, and you wouldn't do that in a pink fit. So that's how you can then tighten up your strategy to get rid of low price stocks. And again, you get rid of high price stocks if you say you want the close is less than a minimum, so greater than a minimum and less than some sort of maximum. So you would weed out, for instance, indexes that may creep into your data set. Okay. So that shows how we can develop a golden cross strategy, initially starting at a 9 on 21. But you optimize it, you can get whatever suits you best. You can look at any of those trades as we did there for the brain chip trade as a chart. It's a simplistic chart. There's not a lot I have found that you can do with it. Certainly nothing like you can do within BullCharts. What I normally do is I have BullCharts open at the same time. And when I see something that's interesting, I pull up the BullChart screen and I look at that chart from not within RealTest. Let's look at some more complex examples. And here's the one that I showed 2 sessions ago, the price momentum, get back up, price momentum volume and the multiple moving average strategy. So this is a somewhat bigger piece of code, but it's not horrendously bigger. One of the ways I have made it shorter though is there's a nice feature here where you can include external pieces of code into your strategy. So here I have got a piece of code which calculates the price, momentum, volume calculation and turns and presents that as, in particular, PMVX all. It lets me know whether it's on or off. And you can see other things also within that piece of include code. Price rising, SMACD up, and volume rising are also defined, and they can be used and reported upon either within the scan or within the data component which does the calculations. What I've done here is I've imported those pieces of code. I've also imported a piece of code that looks at the multiple moving average for the index and for the stock itself. So this will give me variable names of index multiple moving average red. So if the XJO is red, this is going to say, yep, the index is red. You should maybe not be thinking about not going here, and so on. And again for the stock. I define some conditions according to the colors of the multiple moving averages. Then I set up my entry conditions, which is made up of a number of components: EN1, EN2, EN3, EN4. I set those up. EN4, for instance, is PMV X all is true, then EN4 will be true. And then I combine those in this manner to make the entry condition, or the enter condition. And I put them on separate lines like this so that I can easily comment different conditions on and off within the code. And the same for the exit. The other thing I've done here is I have calculated a position score, position rank within this piece of code that I import, that I include. And within the strategy section, I'm saying I want the enter score to be according to the position rank. So I rank the selection of available stocks according to the position rank. And in this instance, the position rank is the rate of change. The rate of change 10 on 10. I normally use 40 there. So that's the rate of change 10 smooth by 40. And those parameter values go into the position ranking code here and generate a position rank. And that position rank is used to define which stock is selected for purchase as part of the strategy. And then we say the entry condition, the entry setup is the entry condition, which is the sum of these, and the position rank is less than the number of positions, because I don't want to be buying something that may be ranked 17th when I've only got 5 stocks in my portfolio. Let you take that in. Maybe a lot to take in there. Again, apply it. Did its little calculation. Test it. So that is that PMV strategy. And you can see these horizontal parts are when the strategy is saying stay out of the market. And these would correspond to the index being red, so the multiple moving average being red, so all the long-term moving averages are above the short-term moving average. Think of Guppy. So you'll see that this gives you a nice step. Still a fair bit of drawdown in here. It's not perfect by any means. But if you look at, it's given a net profit of 1.1 million from 100,000. It is admittedly over this very long time period, from 93, from all the data. It's done 300 trades in 1,500 weeks. That's not too bad. If we look at some of those trades, the best trade was 121% return, and the worst trade was a 44 negative drawdown. That's on a per trade basis, not on a portfolio basis. So it's not that bad. What else can we see? The rate of annual return on this one is 40% per annum, which is quite high. But you'd have to convince yourself though that some of the other data available would suit your character. So look at the report. Well, that's the checkerboard of winning and losing months. So yeah, not that bad. But there's some years here down 36, 34, but 40%. You may want to set parameters that avoid that happening. Again, the equity curve, the drawdown. Monte Carlo, again, that's not bad at all. It's happily in the middle of the best and the worst. And here, out of interest, this is the code. But you'll see here when I include something, it then expands the code in line. So there's calculating the weighted moving average of the for the Guppy type MMA. Here's defining the rate of change, and so on. And then we're back, and here's the PMV calculation. And then we're back into the code as proper. So I'll show you one other. So what these ones are more heavy duty tests, and these are ones that I'm playing with at the moment. One of the things I like about it is that, especially when you use this include function, you can pretty well get everything you want to see on one screen. And I find that sort of kind of nice when I'm coding in BullCharts. Even though you can define functions, I do tend to with the large multi-screen pieces of code, and that just leads to high strain and potential error. So if I apply this, I test it. So that's a strategy which actually has a nice, it's got a smoother equity curve. There are some big jump ups, which you like, but there's no really horrible downtrends. I mean, obviously the 2020 downtrend looks quite small in this because it's a long period of time. But in terms of an equity curve, that's quite pleasant. If I look at again, step number 2, 1,100 trades out of 1,600 periods, that's acceptable. I look at the trade worst. The worst trade in this is a 64% loss, which was $12,000. Again, based on a $20,000 pot. So this was a 5-stock portfolio, 20,000 at risk per stock. And in this point in time, one of those 5 stocks hit the back test for $12,000, $13,000. The best test here is 700%, which is not a penny dreadful because we've filtered that out. So from $1.15 to $9.35. Gee, wish we could pick those ones. But it picked it here. It came in there and exited here. So buy at $1.15, sell at $9.35 for 700%. This is obviously a log linear scale, so it displays in that manner. Now, I think from memory, because I have tuned this to give that very good result. So it's only got it's still got 5 positions, so it's not a horribly small portfolio. I'm saying I'm allowing a stock to be held for 18 weeks. The rate of change formula is rate of change 10, smooth by 40 weeks. And I use a weighted moving average there. 25% minimum stock and a maximum stock price of 1,000. And that filters out any indexes that might try and creep into your data. Okay, if I look at that at the moment and I do a scan on that, that gives you the but that gives you the top 5 stocks according to that strategy. So I look at that and I go, okay, this strategy is recommending this is the top 5 strategies. Do I really want to use those ones? I would then cut across into BullCharts, pull up the stock on a weekly chart, and is that a good tradable stock? Actually, it's probably not too bad. It's that particular strategy will look for high performing, so it's not looking for a particularly smooth. So it's a high risk or a medium risk strategy. But I would look at it on this sort of screen, which is a get rid of those. That's better. So you can see this stock here, the multiple moving average, this stock is green. So this is saying, yeah, I'm happy to buy. The PMV is dark green. That says all of those are green. And the volatility bar here, which is something I use to look at, is green too. So that says my indicator gives a buy signal here, and it's still one of the, well, it is the top stock at the moment under that strategy. It has I mentioned that we're looking for the entry score as the position score. So it should have a good entry score, the rate of change score. And the rate of change here, 1040, is 30%. So this is 30% rate of change is high, and therefore it's not surprising that this stock would come to the top of that list. The other nice thing I can do is, I won't do it here, but I have this scan also here within BullCharts. So I can run the exact same scan within BullCharts and compare with RealTest, and happily they show the same results. So New Haven Coal is the next one. Would you want, again, volatile stock, but it's been picked as the second strongest stock according to that strategy. Rate of change 28.6. In fact, and this is just given a sell, so it's given the buy and the sell within the same week. It's top stock, and that sell is because I suspect I haven't updated the price in that. Last one, see if you'd buy NEA. And that's a bit different. There's a huge gap up there. Something's happened. You'd make your call on that. But anyway, so that's how you can define a bit more complex strategy. You use the scan to look at the last bar. Bars left to 0 tells you which ones are the stocks you want to buy or it's recommending to buy. You've got this parameter section that you can just go to town on. You can optimize. I'll do a quick one there, run tests on number of positions. So it's run 10 tests. Which of those got the biggest profit? Turns out that, not surprisingly, using one position for this strategy is the highest performing portfolio and the lowest number of trades. Again, when you're only running with one stock, you would expect a very low number of trades. I look at that. And you can see there that's part of that big rise is because there's been an enormous stock in there. Okay. So what I've shown you there is how you can build quite complex strategies, but the code isn't as difficult as you might think it to be. We're able to develop a golden cross strategy 9 on 21, and then showed how we could optimize that. I then showed you some of the more complex strategies that I play with, and they're not that much more complex. And then the fun comes, as I say here, play to your heart's content to try and find what you find is your best solution. And there is no best solution, because you might get one with a very high rate of return, but it might have too many trades, or it might have too big a drawdown, or it might be predicated only having one stock in the portfolio. So horses for courses, but you have the ability here to play to your heart's content. And I think I've shown that it's very, very, very fast to run this. So you can sit and you can run 1,000 strategies in a day, no trouble. You can set this going. If I turn everything on within the optimization, you see every time I turn it on, there's more things get tested. It's got 70. What's that? Oh, 730,000 back tests to do there. Well, that's not going to happen in 2 minutes, but you could leave it overnight. The problem you end up with is you'll have a superb result, but it's so specific and it is so prone to noise that if you wiggle any of those parameters, that superb position will collapse. And one of the things that's not within RealTest, but is within Amy Broker, is really nice, is they have that 3D landscape that shows you the peaks and troughs and the mountains and the valleys. And that allows you to see the resilience of the parameter set that you're playing with. That unfortunately is not available within RealTest. But what I would do is I'd cut this down a bit until you get, up to a couple of thousand tests can be done within 3-4 minutes. So you get down to 300, that's 25 seconds or something like that. So you can play around as much as you like. You can also change the number of tests depending on the on how, can't find the word, on how small each of these steps are. On the smaller you make the step, obviously the more tests. You can see that in this one here for the ROCW parameter 2, I've made the step size 5 because I'm going from 10 to 50. And rather than go by ones, I've gone up by 5 just to make it a bit more viable from backtesting optimization. And we're almost there. I think that. So summary for me, I think it's a great backtesting tool. I've said you've got near real-time access to the data sets through Yahoo. It's very, very fast because it uses the in-memory database and multiple CPU threading. It's got an easy-to-use interface. I didn't quite show it, but there are features such as when you all this indentation is automatically generated for you, and when you change something, so if I moves everything across, so it knows how to keep things smooth. I just like that. It's got this ability to click on a paragraph header and comment it out. So you can comment out whole areas, bring them back in. Just some nice little easy to use features like that. The include feature, I think, is very powerful. I think it's better than AmiBroker or TradeSim, but each to their own. I think you can come to grips with this a lot more quickly than you could with either of those. Having said that, I recognize that I'm probably conversant, or I'm quite happy with programming sort of interfaces, so this wasn't too hard for me. It's modest in cost. It's about 400, maybe 450 Australian, and about 150 a year for support. And the support is excellent, absolutely excellent, and it's friendly. Sort of kind of nice that you can send an email to the guy and he'll send it back. There's a forum, an email through the forum chat room, and you'll get a reply back within an hour or two. It's absolutely stunning. I don't think the guy sleeps ever. And Robert, that's it. Open for questions.
Very good, Des. Thank you. In the chat box, Paul has asked a couple of questions. Specifically, are there any pre-made strategies available in the RealTest community? Some good coding examples.
Yep. Good question. I didn't cover that, but I should have. So here we go. Examples. So these ones here, these ones in uppercase, these are the ones that I put together. These are the examples. So, and there's all heap of stuff, rotational strategies, multi strategies, and frequently people will say, has anybody done this? And somebody will, on the chat room, say, oh, here's the code for that, or here's how to do that. So if I pull up one of these, I early on I use some of these. So there's a strategy. I don't know what it's doing, but there's how you use NORGATE data. Instead of saying data source Yahoo, you say NORGATE. Oh, this is Nick Raj's weekend trader, and boom. I mean, that's pretty straightforward. If I what I'll do, I don't know whether this will work. Just seeing if I can run this. So if I comment that out, no, I'd have to go through and yes, because in our UI is particular to NORGATE, but so yes, there's a huge lot of samples. The other thing that it can do, it will at the end of the week, or whenever you run the test, you can get it to export the stock list that you want to buy in a format that's available for input to automated systems. So you could automate one of these and it would just go off and do its own thing. I'm not there yet, and I wouldn't normally do that. I don't have the guts.
Thanks, Des. Des, thanks for that. I'll take back sharing.
I'll send that presentation to you for you can put it up, Robert.
Okay, that'd be good. Thank you. Des, thanks for that.